Yo, yo, what's up, everybody? How y'all doing? It's your boy Devin Baptiste representing Black Diamond FX in the building. Holla at your boy, man. All right, so y'all saw the title. How am I making $5,000 weekly? And actually, it's more than that, but let me tell y'all something. You can do this, man. I'm talking about you don't even have to trade every day. You can if you want to. If your setup is there, you can trade every day or take a few days, set you a target. Maybe like let me tell you something. My setups, I average between with this from what I'm about to show you. I average between $1,500 and $2,000. And that's just with one contract. That's one contract, one mini. All right. I trade minis. One contract. All right. One contract. And I trade ES and Q. Sometimes I trade gold and silver. But most of the time it's either S&P or the Nasdaq, all right? And I'm gonna show you guys, man. I'm gonna show you guys this. It's a strategy that I'm not gonna say that I came up with, but it's something that because I go to God. Let me tell y'all, before I even get into the meat and potatoes of this, I go to God every morning. Every morning when I wake up is the very first thing that I do. I'm telling y'all, it's going to make a difference in your trading. Spend time with God. You pray, you praise, you ask God, to forgive you of your sins. You ask Him to guide you, to lead you, to show you these charts, show you the setups that you need to be trading. I'm telling you, man, go to God. Seek ye first the kingdom of God and His righteousness, and all these things shall be added unto you. All right. Now check this out. So the first thing I do, I go on my higher time frame. I might go to the 1 hour, I might go to the four. You can see up here I've added the 8 and the 12 because I like to go through different time frames just to see what's going on. All right. And sometimes, like I added the 8 and the 12 because it went from 4 hour to daily. And you kind of want to see what's going on in between there. All right. So I added the 8 and I added the 12. Now you can only do that if you have a paid trading view subscription. If not, then you got to stick with what you got. All right. So I added the 8 and I added the 12-hour time frame, right? And I go on my higher time frame, either one. I like to start with the one. Normally the one is good. I get some good detail, I like to see what's going on. But I start at the 1 hour and I want to see what direction price is going in. All right. So I'm looking at this now. I wake up this morning, all right, and I see, oh, okay, on the 1 hour, what happened? Price came down. Price filled in this fair value gap, and we got a liquidity sweep inside of a fair value gap. My first thing come to my mind, when you get a liquidity sweep, price come down into internal and starts moving away, we going from internal liquidity to external liquidity. All right. That's something you guys really need to understand. Understand your areas where your liquidity lies. The market moves from one area of liquidity to the next, normally internal to external. All right. So I saw that. Then I also saw like I said, we got the liquidity sweep. Price started coming back. All right, cool. We see another fair value gap right inside, right here. Create another fair value. I'm like, oh man. So look, let me tell y'all, I got this thing 8:30. All right. I like to mark the 8:30 candle. So I go in my 30 minutes. I mark the high and the low. This is my 8:30 candle right here. Boom, boom. I mark the high, mark the low. Wait for it to finish. Wait for that 8:30 candle to finish. If you don't, you might get kind of caught up. All right. Now, what is that 8:30 candle doing? Or what did it do? This morning, it was like taking candy from a baby. Let me show y'all. This is my 8:30 candle. Always look at what happened. All right. We already got a liquidity sweep right here. We already broke this structure, this change of character right here. First sign of reversal, change of character right here. What happened? Price came down, filled in fair value gap right here. Look what happened at that next candle, that next 30-minute candle. Boom, liquidity sweep below. Let's go down. Before this even happened, before this liquidity sweep even happened. Matter of fact, as this was developing, I was already in the trade because I was already confident. I saw everything that I wanted to see already. All right. But let's go down to the lower time frame because everybody can't trade like this. All right. So what you do next, you go down to a lower time frame, look for your entry. Once that 8:30 candle done, look for your entry. All right. Look what happened. We got a sweep below, another liquidity sweep, just like this liquidity sweep here in a fair value gap. Look, we got a sweep here, sell side sweep into a lower time frame, fair value. Go to the 15 minute. What we look like? All right. Still kind of jumble up. We're looking for an entry now. Okay. 5 minute. Oh, let's see what we got here. All right. Boom, boom. All right. Let's go down a little bit lower. Let's go to 3. All right. Now, let me tell you this. You could have waiting. That don't even make sense. Waiting. All right. You could have waited. Let me move this up some. All right. So a lot of times you want to wait until you get that next breaker structure, which will be here. All right. And then look what happened. You got that breaker structure here. You could have taken the trade. If you didn't get down here, if you wasn't sure, you could have taken that trade. Watch this. Okay. So we broke that structure right there, came back. Look what we got. Fair value gap. See, it's on a small, this is a 3 minute, 3 minute fair value gap. You enter right here, put your stop loss down here, then as price continues to go. Once price, see this pullback right here? Watch. See this pullback right here? Once price started going up and broke this, then you could have moved to break even or maybe even up a little higher. Now my target was right up here, 6377.5. All right. Now, this is ES. Look at what's going on. Now, I already got out of this trade. All right. I already got out because this was my target, but I see how price started kind of playing around. See that? How it started kind of playing around. It got right there. Man, look, if you get right there, this is your target. Go ahead and get out because it's not guaranteed that it's gonna actually break it. Price came here, started coming back some. I'm like, I'm gonna get out right there. This close enough. This is good. You can keep them extra few dollars. You know, that ain't but another point. Another what, $50? $50 a point. ES is $50 a point. So this is what another point, $50, another $50. I'm good. You know, now watch, check this out. How much money? If I took this trade from way down here, I saw this liquidity sweep. Now watch this. Let's go to the 1 hour because I want to show y'all something. I mean the 1 minute. I want to show y'all something. You want to know where I got in at? I didn't get in up here. I got in down here. And you want to know why? Because I recognize that what was going on already. We had this sweep. Once this went up, it came down right here. All right. And then it started going up again. All right. That's when I got in. Because I noticed this was like a little zone right here. Price respected this. So as it started going up, that's when I got in. So I want to say about right around here somewhere, right around that 6331 point 365. I think it was about point 0.5. All right. How much money is that? Check this out. Check this out. I want to show y'all something. Now hold on a second, because I'm gonna log into my paper right quick, because I want to show y'all. I want to show y'all. No, I didn't record it while I was doing it. Now this here was from, this wasn't from, was this from it? 2262.5? Hold on a second. Let me check. Let me check. Let me check. So if I do a buy limit, I only did one contract. I think it was one. All right. 6331.5. 31.5 to, let me see, I went up to I think around here, right around this high right here when it was coming back down. Let's see, 63.76. 63.76, 22.25, 2,200. Y'all see it right there? Hold on a second. Wait, what's going on? X. All right, right here. 63.76, $2,225. And how much was the risk? Because I put my stop loss right underneath here, right underneath about 63.28. 63.28, $175. All right. I risk $175 to make $2,225. Y'all tell me that wasn't worth it. Tell me that wasn't worth it. $2,225. All right. Now, let's look at NQ as well because I have something else I want to show you guys. Something else, well, not show you because something else that I look for. It didn't happen today, but it does happen pretty often. But let me show you guys. Let's look at NASDAQ. This is the S&P 500. Like I said, my favorite. Look, 175 risk, and it was 2,225. All right. So now let's go to NASDAQ. Let's check this out. Same thing. Same thing. Go to the one. Look at that. Fair value gap. Oh, something else I want to show you guys as well. Let's go to the 8 hour. Because like I said, a lot of people talk about top-down analysis. I do top-down, but then I go back, I bounce back and forth. If I see something developing, I want to know, okay, what happened on that higher time frame? What happened on that higher time frame? All right, what is this doing? All right, if I get something like this, and I see this big old fair value gap here. Well, I went to the 8 hour and I noticed we had two fair value gaps lined up with each other. This one and this one. When you see that, that's called an inverse fair value gap. All right. When you get an inverse fair value gap, a lot of times that's a very, very strong zone, a very strong area of entry, right where they overlap. See, like, okay, so we got this fair value gap here, there. All right. Then we have this fair value gap here. This one from here to here. All right. So the overlap area would be down here to up here. All right. So watch this. I'm going to mark it from here to this one. I'm going to stretch it over. All right. Now I'm going to erase the other ones because it's kind of messy. Let me erase these. Boom. Okay. Now that's my inverse fair value gap right there on the 8 hour. Look at this. Sweep, liquidity sweep right here. All right. I could have got in this trade yesterday around market open. At market open yesterday afternoon and could have held it all the way, but I didn't. Why? Because it's not my strategy. It's not in my trading plan. You trade your plan. You trade your strategy. All right. All that other stuff don't matter. No matter how much money was made, it don't matter. Like I said, I could have taken it at market open if that was my strategy, but it's not. So I didn't take it. Okay. So watch my strategy. 1 hour. What we got? Fair value gap. This was the fair value gap. All right. Notice it's inside of the inverse fair value gap, right? And look what happened. Price came down. Remember, we had a liquidity sweep. I didn't mark that one, but it came down. This was the sweep right here. If I mark it, you're going to see. Watch, I'm going to go back to the 8 hour because I want you guys to see this and understand what's happening right there. All right. Now let's go back to the one. Look at that. See right here, there's that dip right here. The sweep. This is the sweep. It swept these lows right here inside a fair value gap. And look what happened. It created another fair value gap. This was the gold right here. All right. Now check this out. Because this one played out a little bit differently. All right. This one played out a little bit differently. So this one tapped in where? Right here. Before my 830 candle. Remember I told you I marked my 830 candle. I marked the high and I marked the low. All right. But this one played out before. It's okay. Look, liquidity sweep inside, fair value gap. Same thing though. Same thing. Trade your strategy, trade your plan. All right. Now, something like this, I would say go ahead on and take it. Because if we go down the breaker structure, we had one right here on the lower time frame. It broke this structure, came down, tapping in. So you could have gotten in right here as well. All right. Mine was more like a second entry. All right. How? How was it a second entry? Y'all want to know? Watch this. Look what happened. Came down. We swept. This is my 830 candle, right? Now, look what happened. I could have entered here, but no, I waited for my 830 candle. All right. Now, check this out. Excuse me. Fair value gap came down. This 830 candle is a part of this move starting to move away. All right. So this was part of the down move into this little fair value gap right here. This was my 830 candle. This one, we didn't get that sweep like we did over here on ES. See, on ES, we got this sweep, and Q didn't give it to me. All right. So where would I have entered? Let's go. Let's look. All right. 830 candle. Let's roll. Let's rock and roll. All right. It broke out, came back down. All right. Came back down into the range. All right. Let's see. 5 minute. 3 minute. I'm sorry. Boom. See this little fair value gap here? Although it tapped it right here, you still had like a little zone, you had a little area that wasn't filled right there. And you had like a little zone right here. Once I saw that, I'm like, oh yeah, it's game on. Now you could have gotten in on this little tap, but the 830 candle hadn't finished yet. It hadn't even finished yet, right? So once my 830 candle done, I see it went up. Let's see what it looked like on the 5 minute again. Let's see. All right, no, you can't really see it. But look, see, you got a little liquidity sweep right here. From this candle, swept down below it. 3 minute, let's go to 1. All right. So you could have gotten in here. I think, no. Yeah, this one when it came back in. This was my entry. I'm sorry, y'all. This little tap right here. See how it came back down in the fair value gap? The 3 minute didn't show this. This is the 1 minute. All right. See how it came back down up into that? This was it right here. Got in, boom. And especially when it stopped. Once I saw this wick right here, this long wick, it started making that long wick. I got in around, I want to say when that candle closed. I want to say I got in when this candle closed up here. So that's around 23,200. 20, yeah, around 23,200. Let's see if I do a buy limit at 23,200. And this one hit the target. 23,200. Take profit was up here at 23,404.25. So that was 23.25. Boom, $4,000. So I saved $5,000 a week, but I actually meant $6,000 a week. My bad. My bad. My math was a little off. Y'all gotta understand. I graduated from school a long time ago. My math was a little off. So it was 6,000 and not four. All right. This was the reward on this one. This one actually hit my target. That was one contract. Y'all don't need to be stacking up all them contracts, man. I seen this dude on this app called Threads talking about how he do 3 to 5. He do 5 contracts to make $3,000. And I'm like, really? Now that's on him. I'm not hating on that. I'm not hating on that. I'm saying what I'm saying to saying y'all ain't gotta be over leveraging y'all accounts like that. You know what I'm saying? Find y'all some good interest, get in, and go ahead. One contract and just let it go. Trust, learn the skill, trust your analysis. All right? Learn the skill, trust your analysis. Now, something I wanted to talk to you guys about because normally I like to see inside of my zone, I like to see what's called SMT divergence. I don't know if you guys really know anything about divergence, but okay, so I'm gonna do a brief explanation. If y'all want to learn more about it, then y'all gonna have to learn from your boy. All right. Now I want y'all to look at this. Now, well, I know the market was bullish. And if you look at this, you can tell that NASDAQ and the S&P 500, they correlate, meaning they move exactly the same. All right. But there are times when they don't move exactly the same, right? Check this out. I knew the market was bullish. All right. When I got up, I also knew the market was going to come down and tag it because overall we were bullish, but I knew I'm looking for buys, right? Now watch this. Now you can see they move the same, right? Right? But look at this. Boom. From there to there. That's from high to low, right? Watch this. From here, same spot. Look at the top. I'm gonna move it at the bottom, but the cursor, you can see the cursor at the top and the bottom. Look from here, see it up there? Watch. To here. So look, here we go from high to low, here we go from low to high. At the top, high to low, bottom, low to high. That's called SMT divergence. When you see that, and especially it happens inside of a fair value gap, y'all notice I keep saying fair value gaps. Pay attention. All right. Inside a fair value gap like this, inside a fair value gap like this. All right. Look what happened. That's external liquidity up here. Where does it go to? Internal. Fair value gap. Notice that? Watch this. Watch this. I got something even better. Watch this. I could put on, I knew we was going to get a trade from here because of divergence. Also, if I put on my magical Fibonacci settings, watch this. I call this my black diamond fibs. Look at that. Look at this. See this gold area? 0.79, 0.62. I don't know how well y'all can see it. Hold on. Hold on a second. Let me how do I make this one big? All right, check it out. So I put on my fibs from the low to the high. This is my range, right? All right, we already got divergence inside fair value gap up here. I know this is coming down. I already know it's coming down here. But if you're having trouble finding where your entry is coming at, I'll put on this, and now this is called optimal trade entry fibs. I call it my magical black diamond fibs because I have standard deviation for my targets up there as well. All right. For my price targets. Normally, I can set a price target. For futures, the -1 is more than enough. All right. Up here, this is normally where people like to look for targets between the -2 and the -2.5. I have a standard deviation video on my channel. If you guys want to learn more about it, y'all can check it out. All right. But look, standard deviation came back down. Not standard deviation, I'm sorry. Optimal trade entry. Boom, boom. All right. Right in the middle. And look, it lines up with the fair value gap. Come on, man. Like taking candy from a baby. And look, it might hit the target before the trading day ends. Who knows? But I'm already out with $6,000. If y'all want to learn to trade, holla at your boy, man. I got you. I got you. I'm running a special right now. The next 25 people pay a one-time $250 lifetime fee. Lifetime, you get access to my community where we discuss trade ideas, we share trade ideas. People ask questions. We do live trading. In the mornings we do live training, New York session. At nights we do live training. All right. So we do trading in the morning, training at night. All right. Y'all got access lifetime, lifetime. All right. It's lifetime. I don't care if it's 100 years from now. If I'm still alive and this is still popping, that's if Jesus hadn't come back yet for us now. And once Jesus come back for us, it's over. It's over with. All right. It's over. No more trading unless God allows trading in heaven. All right. But as long as I'm here, as long as I'm alive on earth, able to do this, God bless me with a sound mind and body, and I'm able to teach you guys, I'm here. Y'all interested, holla at your boy, and I will get to you. All right. Leave me a message. You can email me, blackdiamondfx@yahoo.com. Hit me up, send me a DM on Instagram, blackdiamond_FX. Send me a DM. Um, and I'm gonna get back with you, all right? I thank you guys. If you like this video, please hit that thumbs up. Please share it with your trading community. Holla at your boy. I'll talk to y'all later.